Greetings to everyone, friends. I am here with the fourth video of the Binance Futures usage series. In this video, friends, we will talk about whether to use Binance Futures on the cross or whether to use them in isolation. I will explain the difference between these two. I will explain which one is better in which situation. Let's move on to our video without wasting time. My friends, I am Monte Crypto Contu. I create content about cryptocurrencies for you on YouTube. You can subscribe to the channel so you don't miss such opportunities. My friends, you know that we are shooting a special futures education series for beginners. Instead of explaining futures in one video, we divide it into 10 separate videos, and I try to explain each concept in detail. In this video, we will look at the concepts of isolated and cross. If you learn futures from the wrong people, you can lose a lot of money, so you need to get the right education about leverage trading. If you have someone around you who is curious about futures, you can recommend this series to your friends. Now, first of all, we look at this. My total balance right now in this account is dollars, and dollars in futures and about dollars in spot. The first thing we need to find out is this. Even if I lose all my money in futures, nothing happens to the money in my spot account, which I have dollars in my current account, or there's no such thing as going into debt in futures. Now we've pocketed these things. And guys, I opened the Bitcoin USDT pair. First, I'm going to open an isolated position. I came to the margin mode section. I clicked on isolated. Isolated is the name. It means isolated. And each position is only responsible for itself. I used Onyx leverage, guys. I'm opening a position on the market for about dollars. Look, my position went straight in. I had dollars in my futures wallet, but I just opened a dollar. My liquidation level is dollars, and I can only liquidate my dollars margin on this position. I can't do any more damage, but my liquidation level is higher, as you can see. Now I'm going to open a position on the cross, and then I'll tell you the difference. First of all, I close my position. Now I'm here. This time I want to open a cross position. I clicked. I'm going to open a position with the same cost. I open my position. Look, just now I had a liquidation level of dollars 1, and now I have a liquidation level of dollars 1. So it's gone much lower. Isn't that a good thing? Well, at first it looks that way, but here's the thing. If Bitcoin comes to dollars, I'm not only losing this dollars margin, I'm not only losing dollars in this position on my margin, I'm also losing dollars available money in futures. I'm losing that too, so it's actually a bit of a professional method, cross. But if you are new to the market, isolated is safer for you. So how can I reduce my liquidation level in isolated? Let's talk about that. I'm closing the position again, and I'm back in isolated. I'm going to open a position at the same cost again. Talas, I opened a position, and as you can see, I have a liquidation level of Talan. Again, how can I pull this liquidation level down if things go bad? I can pull it down like this. Look, there's an order type. I'm going to come to the limit instead of the market, and I'm going to say that if Bitcoin goes down by dollars, I'm going to buy about dollars. This is probably something that we can calculate on a calculator. It means this. My margin right now is DAO, or when Bitcoin dollars comes down, my margin will be about dollars. Because look, I have an open order here. It will be realized and added to my position. My margin will be about dollars, and my liquidation level will drop to, for example, dollars. I can calculate my next liquidation level on the calculator. And I can also do this. Let's say down goes down. I can put another buy order here at down. Look, I put another DAO buy order. I came to my open orders. If Bitcoin is going to fall gradually, in the worst case scenario, I can enter my buy orders here. So I can actually lower my liquidation level back down to dollars, just like the cross. Now then, here is the main difference between isolated and cross, friends. In the cross, it can instantly add my entire wallet in futures transactions to my margin. So which one should we use in which situation? By the way, let me also say this. There is a tactic to reduce our liquidation level to dollars on the cross. There will be a video about this later in the series. So sir, should I use isolated or cross? Then you need to decide this. For example, I opened a position right now, a dollars isolated position, and I said that if this position can melt, if it explodes, if I don't want to damage the rest of my dollars, I can protect this position in isolated. So I'm saying I'm not going to defend Bitcoin with all my assets. I said I'm willing to be liquid if it comes to dollars. That's the logic of isolated. Now I'm going to close our position and move back to the cross. And let's talk about the logic of the cross again. I open my position on the diagonal, which means I'm going to hold this position. And my liquidation level is now dollars. And I can spend all my money to protect this position. But I want to spend it in the most efficient way. Then you can open a cross. That's how I use it. And what that means is this. For example, let's say things go very wrong. The Bitcoin dollars is withdrawn. And then this is what I need to do. I transfer money from the spot to my futures wallet, and I can take the liquidation level that you see here even lower. So what that means is I'm not going to give up my position at all, and I want to make the most efficient use of the asset I have. I'm taking the risk. Or if you're more professional, the cross means something like this. For example, I'm at a loss in Bitcoin, but I've opened a position in Ethereum. Let's open a position there. I'm at a loss on Bitcoin, but I'm in profit on Ethereum, and my profit level on Ethereum can pull down my liquidation level on Bitcoin. So if you can use an advanced futures, of course you can use a cross this time. But if you're following this series and you're really new to the market, if you're new to leverage trading, which is very risky, then it's more efficient for you to use isolated and open positions piece by piece. Look, my position level of DAS just now is my Bitcoin liquidation level, but now that I'm making a profit in Ethereum, my liquidation level in Bitcoin is starting to drop. So I can open 5 positions at the same time and profit from one position and reduce my risk in other positions. This is the main logic of the cross, friends, but for the last time, isolated can be considered safer for beginners. Friends, the video you are watching right now is an award-winning video. 2 friends who like the video, subscribe to the channel and reject the tweet in the fixed comment earn 300 TL each from us. My friends, what did we do? We opened a futures account, we activated futures, and we answered the quiz questions. We transferred money to futures and learned how to open long short. In this video, we learned the differences between isolated and cross. We ask you to like the video to support us. At the same time, ask anything you have in mind as a comment so that we can get feedback and make better videos for you. We also answer these questions in the comments. Look, as I'm getting more and more profitable in Ethereum, my liquidation level in Bitcoin is getting lower and lower. Right now, it's down. And now I'm in profit on both positions. And this time, on the contrary, my profit on Bitcoin is helping Ethereum to pull down its liquidation level. I hope I've made myself clear. As I said, futures are an important topic. I recommend you to finish the series carefully. Hope to see you in the next video. Goodbye.